Morning, everyone. It's a few minutes after 9. This is your pre-opening comment, video number 240. Retail sales came out. They were horrendous, down 16.4% versus down 12. So continuing to get worse. We also had the New York Empire Index down 48.2%. That follows a down 78.2 last month. The markets are weak on the basis of Mr. Trump and China. Evidently, he's seeking to block the shipments of chips to Huawei, and that turned the futures lower. Overnight and into this morning, we have some numbers from the Eurozone, and they too are very disappointing. Germany's first quarter GDP was minus 2.7. The expectation was minus 1.9, but the comment was that Q2 will be worse. In Italy, we had industrial new orders down 26.5%. Versus last month's 4.1%, and new industrial sales down 25.8% versus 1.7%. This move in the retail sales is not really a surprise. The numbers are horrendous. They are what they are. There have been several filings for bankruptcy in retail this week. Neiman Marcus, J. Crew, and a couple of others. Looks like J.C. Penney is also getting closer and closer to it. So the trend in the acceleration of the move from bricks and mortar to online was quoted this morning as we were expecting it to really take hold by 2030. Now it looks like 2025. On the good news front, retailers reported that they've sold more pajamas. Pajama sales up 150%. In the futures market, the screen shows the S&P. I mentioned yesterday and the day before that this crossover of the 5 and 20-day moving average is a roll to the downside. It still appears that way. It looks to me like the most important number on this chart is 2813, a close below 2813, which was Wednesday's low before yesterday's reversal and rally. A close below that would be a new weekly close for several weeks, and would probably send us down into the same area I've been talking about, 2,700, or maybe a little less. I use the 2,700 because that's also where our 50-day moving average is. Let me just show you on the weekly what we're looking at. And that is, pretty clear that if we close below there, that we're going lower. This close, which was the fourth week of the recovery, was 2779. So a close below that clearly would take us, it's not even very far on the chart, 2700 or this area of support at 2650. So unless we turn and run here back to the upside, that's what it looks like to me. I also want to show you the gold chart, which gold is up 12 and change this morning. As we've been discussing, it clearly broke out on the weekly basis. The high close here is 1752.80, and today's high so far has been, let's just see, Today's high so far has been 1755. So we need a little bit more action to the upside in order to, continue this move. But it certainly looks like that's what's going to happen. The oil is up 80 cents and the bonds are up roughly another half point. I'm assuming that's partially flight to safety and partially the rest of the world buying more of our bonds because they have a yield. Have a good day, everyone.